I wanted to start this video with a very important announcement. Um, Starbucks is now serving their holiday drinks. And I hate to say it, but the chestnut praline latte is better than the eggnog latte. Time for a market review. Well, it's time for the third quarter market review. So that's the time frame ending September 30th. We're already into November now, so I don't want to spend too much time talking about the third quarter. It was a great quarter for the markets, but there's been a lot that's happened since then, and I sort of want to focus on that. But really quickly, we'll go over the third quarter performance, and then we'll talk about where we stand today and maybe some thoughts about how investors should be thinking going forward. So, how did the third quarter go for the markets? It really was a great quarter. So let's take a look. The US stock market returned 9.2%, which is 57% of the global stock market. So really strong performance in the US stock market. We've seen that actually for a while now. International developed, not quite as good performance, but still a better than average quarter at 4.9%. That's 30% of the global stock market. And then emerging markets, the remaining roughly 12% of the market, strong performance there with just over 9.5% return. Global real estate has had a rough year so far, but a decent quarter coming in at just about the average expected quarterly return, 2.37% for the global real estate. In the bond market, this year we've seen a pretty strong drop in interest rates. So they're not giving you the returns that they used to. So we're seeing lower than average quarterly returns for the bond market. But again, bonds do offer that stability where stocks and real estate offer higher expected returns. But in order to do that, they include a lot more volatility along the way. So let's back up from the quarterly review and just look at a 12-month period. You can see a lot of volatility in this period. A huge drop in March when this pandemic became something much more serious and we were starting to realize the gravity of the situation. But since then, companies have actually done a very good job of making adjustments to that, and we've seen a strong recovery in the markets. So if you look at a 12-month period ending September 30th, actually we see strong returns. So the US portion of this global stock market was up 15%. International developed stocks were just barely above zero at 0.16%. And emerging markets actually had some strong performance as well, up 10.5%. So, this has felt like a really volatile year in the stock market. But if you look at a 12-month period, even including all of the pandemic along the way, we've actually seen some strong returns in the stock market. So again, holding tight to your strategy has proven to be beneficial. So here we are. It's November. Since the end of the third quarter, the global stock market is up somewhere around 5 or 6%. So we've actually seen some strong performance. Really, I think where that's coming from is the fact that we're going to have some kind of a mixed government. So it seems as though Biden will win the presidency. Obviously, there's still a lot to happen there to figure everything out, but it's seeming like it's a Biden presidency. The Senate, at this point, seems to be a Republican majority Senate. In January, there are some runoff elections that will be happening in Georgia. Those will be important to watch, but at this point, it looks like a Republican Senate and a Democratic House. So mixed government. We've seen this before. Markets have performed well during mixed governments before. So the result of this election, it's hard to really look at anything and say that's a bad thing or that's a good thing. It's kind of just a result that the markets didn't mind. And now there's uncertainty off the table. And markets don't like uncertainty. So now that we're moving forward and it seems to be more certain where we'll end up, the markets have responded well to that. And so markets have moved forward. We still have a growing economy. Unemployment is falling. Growth is starting to come back. And really, as we stand today as an investor, it's easy to look at all of this and say, this is a very growth stimulative environment. We have low rates. We have a president and really a House and Senate who all agree that we need to provide some stimulus to our economy right now. So as you stand here today as an investor, I think you look at it and you say, this is a good time to be invested. And history has shown that sticking to your strategy over long-term timeframes is the best way to have success in the stock market.